Good evening to everyone gathered here for today's event. We have with us our Chief Investment Officer, Mr. Sunil Damania, in the Q&A session. Drop your queries in the Q&A box below the video on any concerns you may have on stocks, sectors, and market caps, and our panelists would answer them. Over to you, Mr. Sunil.
Thanks a lot, Jason, and very warm welcome all of you. Yes, market did well, but we do have a very big event lined up tomorrow, and of course market will react, Indian market will react not tomorrow but day after tomorrow. That's nothing but the Fed policy action, and also going to give you some color on what we should expect from the Fed. So before that, I just want to start, before I make some small presentation, let me put a disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance would not be construed as an indicator for future returns. One more disclaimer I would like to tell you is that whatever discussion we are doing pertains to Markets Mojo, not to the Mojo Infinity, because Mojo Infinity is a different score, different logic, and hence is neither a buy nor a sell. Whatever I suggest today on this webinar pertains to only Markets Mojo, nothing to do with the Mojo Infinity. Now let's try to understand what is happening. I think unfortunately since 1st December 2022 till yesterday, except Nifty PSE index, everything is in red. And what has come as a, if you look at Nifty FMCG, definitely just minus 0.3, but otherwise the minimum decline has been, I'm saying, is 7.6%. So everything is above 8%, if you can see. With someone going as high as 20%, that is Nifty Media, Nifty Metal is down by 18%, oil and gas 17%, energy 7%. So the point I wish to convey is that not a single sector where someone to take shelter in terms of protecting the capital. Every sector has come under heavy selling pressure from 1st December 2020. It has been extremely challenging for the retail investors or even for the institutional investors like fund manager to generate positive returns. And I think, so for some reason, if your personal portfolio is down, don't lose heart. You are part of the complete the downfall. It's not that you are the only one, and that's the consolation that you can take. Number one. Number two, every sector has seen selling pressure. What has come as a big surprise to me, I must tell you that, which not many people would have observed, is that Nifty 50 is down by 9.7%. But small cap index is down by only 9.4%. So in this kind of a what we call panic of situation, the small cap has outperformed. What has come as another surprise is that if you look at the mid cap, while Nifty 50 is down by 9.7%, the mid cap is down by only 8.7%. So somewhere, again, I have been kept saying this for quite some time, and we continue to believe that mid and small cap should outperform the large cap. And as we move more into 2023, as the time passes in 2023, data does indicate that there is some smart money moving from large cap to mid and small cap. So December full month, January full month 2, February 3, and 3.5 months. We are mid of March kind of a stuff. So in last 3.5 months, the point-to-point return does gives an indication that small cap and mid cap have outperformed the large cap. Now, the $1 million question that every one of you are basically trying to figure it out, kitna rate hike hoga? And today ET wanted my view and gave that view that I do expect 25 bips rate hike. So if you go back and rewind, before SVB collapse, many pundits were expecting 50 bips rate hike. One SVB crisis happened, and then we saw what happened to Credit Suisse last weekend. Now there is a high probability that we will have 25 bips rate hike. 50 bips rate hike is off the table for some reason. We are all living in the life in the era of a probability. Am I right? There's nothing called sure shot. For some reason, it's not 25 bips rate hike, but it's a 50 bips rate hike. I think it could cause a lot of pain for the banking sector. Why? Because your bond that you are holding, the value of that will further come down, and which could another create a mini panic kind of a situation. So for some reason, if there's a 50 bips rate hike, I think I do expect market to go down substantially. Now it's not 50, but 0, no rate hike only. I think market will take a lot of comfort from that. And if it is 25 bips rate hike, then the question would come, to फिर क्या होगा? So today market is budgeting for 25 bips rate hike. So don't expect any upside or downside movement major. But the press conference of the Powell, and in fact I've said time and again, it's all available on the Fed website. Recording is available of that, or you can watch live also. It's also available on YouTube. Please listen to that. And that body language will decide which way the market. My expectation, and I could be 100% wrong, so please take it with the pinch of salt. My expectation is that Fed may announce 2% inflation target more flexible. Instead of trying to achieve that 2% target in 2023 itself, it may say, okay, we will give some more time for inflation to cool down, and hence we will be little less hawkish in terms of rate hike. If that statement comes with 25 basis rate hike, I think it will really help sentiments to improve. So please look at rate hike and post that the body language of Jerome Powell, and I think this is going to decide which direction market is going to go in an immediate future. Still remember, no events has had a very long-lasting impact on the market sentiments. The beauty about the market is that it moves on, whether it's a positive news or a negative news. The life चलते रहती है. You know, when negative news comes, it's like, you know, you go to crematorium and you feel little sad, and after a few days you are back to normal, am I right? जब क्रिमेटोरियम में तो सब कुछ लगता है क्या मोह माया, क्या ये सब कुछ त्याग देना चाहिए, ये so on and so forth. It does impact. The same way news also. So no impact, no event in the world has a very long-lasting impact on the market sentiment. It could have a long-lasting impact on the behavior of the market, but not on the sentiment of the market. So there is a two different thing I must tell you. So do expect 25 bips rate hike. This is my personal opinion. Now, as you all know, that there is a one worry that has come up for India. Unseasonal rain. Today my driver messaged me by 6 in the morning, साहब मैं आज नहीं आ पाऊँगा. And then when I asked him क्यों भाई क्या प्रॉब्लम है, बोलता है साहब बारिश है और मेरा छाता है नहीं मेरे पास अभी. Now this is unseasonal rain. Okay, so definitely he came because I said was nothing doing. Please come, because it's not that it's raining very heavily. And he did come. But the point is that unseasonal rain has taken a lot of people off the guard. It's not only in Bombay, it's not only in Maharashtra. I have been informed rain is there. Unseasonal rain is in Gujarat, Madhya Pradesh, Uttar Pradesh, Punjab, and it has an impact on the agri output. I have been recently informed, just before coming for this webinar, that Madhya Pradesh government has started procuring wheat little early from the farmers just to reduce the impact of this one. Let's see what happens. So right now, we don't have a clarity in terms of what kind of impact it could have on the wheat production. Because we had seen heat wave, am I right? And normally heat wave reduce the yield of the wheat. It happened last year also, and if this happened this year, this will be second year in a row. What kind of damage it did to the standing crops, including vegetables and fruits, we need to wait and watch. What is more worrisome is that farmers' income. And if you all know that rural income has been a little struggling, and if for some reason if this crop failure happens, I think it could further cause problem the growth in the rural economy. So we need to wait and watch, but that's one data point which has come, and I think we need to be very, very careful of that. Remember, we will get some clarity about El Nino, whether it's going to be there or not, by mid of April, if my memory serves me right. I think mid of April only, yes. And that will also give an idea how good or bad the monsoon would be this year. Now, there are two worries, which I said. Number one is the food inflation, and number two is the purchasing power in the rural economy. And these are two critical factors that government will need to navigate in a very meaningful manner. Another question that a lot of you people are asking, and I would have a doubt in your mind, so I thought let me address it upfront before we open the floor for question answer. The banking sector turmoil, how long it's going to continue? We've already seen two banks in the US going under, SVB and Signature Bank. We have seen how Credit Suisse has been bailed out by UBS with the help of the regulator and with the help of the regulator, but it has caused a lot of heartburns in the system. Number one is that write-off of 81 bonds is going to get legal challenge, because if that can happen with Credit Suisse, it can happen with any other bonds, am I right? And who is going to invest on those bonds then? If this can be written off and I'm going to lose my 100% capital. Now remember, those who have invested, if their value becomes zero, they are going to get impact, am I right? They may also borrow from somewhere else to invest in that, or they would have. So it has to have a cascading effect. And that cascading effect will happen whether we like it or not. We should also expect spillover effect on the banking sector, including India. But this impact could be more limited as compared to what we are seeing in the US and Europe. So these are the challenges that we need to keep in mind. Yes, picture do look little hazy. We do expect market to remain a little choppy. Don't expect market to give a very handsome returns in near future, because market will keep getting this kind of a news which can keep any gain in the check. On the downside, we do expect downside not too much from this level. But having said that, you need to understand that we need to brace for volatility. Why? What is the volatility? Kabhi market upar, kabhi market niche. And that could unnerve a lot of investors in the market. So remain calm and composed. This is a time where we need to be monk. The outside event should not impact us and should not disturb us. So that's what my request to all of you. I do understand that the emotions are running little high. Some are fearful, some are greedy, looking at the market valuations. My advice to both of you are that please control your emotions. The greedy are those basically who think that scrip has fallen by 50%. Now this scrip is sick, jada kya niche girega? And they become greedy. And my advice to them also, find out why the scrip has fallen by 50%. If there is a genuine fundamental change in the story, please stay away. That 50% can go another 50% and so on and so forth. Am I right? So that's what with my, there's few humble requests. Please do not post question that's already been answered by me, because it will make other people bored listening the same answer again and again. For some reason, if you post your question, please rest assured, Jason will pick it up. Do not post and repost the question again and again, because that makes Jason's screen like a Bloomberg. Number 3, this is a forum where you people ask questions. Am I right? I'm so sure you have an access to the Markets Mojo score, and hence you know what Markets Mojo view are or view is. When I express, sometimes my view may vary from Markets Mojo view, but you should always go with the Markets Mojo view for the very simple reason, as I'm a human being, I do suffer from human bias. But please do not write back to us saying that Sunil is saying so and so and Markets Mojo is so and so. That's why I'm saying this is a disclaimer I would like to pay. Sometimes I may vary. And please go with Markets Mojo, that you don't have to write back to us saying so and so. Please follow Markets Mojo view without any hesitation. With this, let's open the floor for question answer.
Okay, this first question by Mr. Ranjeet. Do you think mid-cap IT stocks could also come down for us to purchase in this negative market conditions?
So Ranjit ji, I think mid-cap IT companies, and if you look at in the, like today also, if my memory serves me right, I think IT index was down. So there has been some concerns happening because of BFSI space, where people are not very sure what kind of spending would be done by the BFSI customer, which in turn could impact the revenue of IT companies, and that also include mid-cap IT companies. My sense is that within the mid-cap IT space, don't go for the normal vanilla IT service company. Go for the companies which are doing more engineering-based product or future-oriented product, not run-of-the-mill product, okay, services. And I think they should do better as compared to the normal. As far as the normal business is concerned, whether it's a digital, whether it's a, offering products and solutions, I think cloud computing and so on and so forth, stick with the large caps. In mid cap, I would prefer some of the engineering-based IT companies.
Okay, moving to this next question. This is by Mr. Vigil. He says, I'm an Infinity Power customer. I have balanced cash, and when I try to invest, it said you should wait for some days since the market is choppy. It's better to invest at the fall, as we could have a good valuation currently.
So, Vigil ji, I think, no, I don't know what message we are getting, why they say some days the market is choppy, that's why you don't know. So, based on our IP, sir, we do take into consideration the trend in the stock. We also take into consideration the liquidity, and liquidity has been a casualty. And based on our IP, if you are not getting a good stock that you should be investing, that's why it's not giving you a buy. It's not that we are taking a cash call. So don't worry. The moment we get the liquidity, we will send an email, say this is the generate buy advice. Please go ahead and buy. You are right. We should buy in this market. But it's not that we are taking cash call. It's just that our IP is not giving us. If you remember, we have introduced that trend where we look at the price movement, and that's where the trend in this market, kind of a market, is not satisfying many companies, and that's why we are not able to deploy all the money. In fact, if you ask me, the total investment that we are not able to deploy cash is only 20 crore. It's only 20 crore as compared to we are running thousands of crore portfolio. It's only 20 crore. So it's not that it's a big amount that's giving waiting to be deployed. It's just a small amount that's waiting to be deployed. The moment we get that liquidity, the moment we get that our trend based on IP, we will recommend buy to you, sir.
Okay, moving on to this next question. This is by Mr. Jose. Hi Sunilji, you had once said on the end of 2023, sensex should be at 68,000. Are you still with that or any changes?
Sir, I do believe we will see 68,000, we will see Nifty at 20,100. There is no change in that view. I do expect market to remain choppy in the near term, but medium to long term, I continue to remain bullish. See, remember in this mayhem of what is happening in the banking sector in US and Europe, and of course there will be some contingent effect happening to the other parts of emerging markets also. But I think India will come out much better and stronger. Why? Because fortunately we have a very strong governor at the RBI. The measures we have taken are so, what we call future looking, that we have not done any kind of a thing which we should not be doing it, whether in terms of allowing too much leeway or reducing the norms for the banks and the NBFCs. On the contrary, the RBI basically tightened more norms for the NBFC, in fact 6 months, 9 months back, am I right? So I think in this chaos that's happening, I think India will emerge more stronger. And I do expect FIIS to come back extremely strongly to the Indian equity market. Why? Because there's one place where investors can still look forward for alpha is India in this volatile time. The only challenge that we need to all navigate at this point of time, George, is that the monsoon. And that is one number which could be more India specific than the global specific. Why? Because India is heavily dependent on the southwest monsoon. And for some reason, if there is a deficit in the places where the agri output is more, it could pose a challenge, and that we need to wait and watch. So we'll revisit this number, sir, somewhere in the month of August. At this point of time, I continue to believe that Indian equity market will give returns in mid-teens over December 2022 closing.
Okay. Moving on to this next question. This is by Mr. Ankur. Good evening, Sunil sir. I have invested in both dynacons and praveg, but both are around 10 to 12% down. Should I continue to hold or exit with losses?
You can continue to hold, sir. Right now, you can continue to hold.
Okay. I think a lot of investors are asking this. So Satish has said that can we have a session on the impact of Indian IT companies with anticipated recession in US and Europe and turmoil in the banking sector? Is it wise to invest in these companies now?
So definitely we can do that. That's a good suggestion. Jason just jotted down. So we did present a slide, talking about what kind of exposure the Indian IT companies has in the BFSI space, and I think the lowest has been the Tech Mahindra and some of the TCS and Infosys also a little less as compared to some of the company like Emphasize, which has a more than 50% revenue being coming from BFSI segment. But definitely we can do that. That's a good suggestion, Satishji. Thanks for this suggestion. Jason just jotted down, and let's try to do a webinar maybe next week on the same.
Okay. This question by George. He's asked your view on Brightcom.
Which one?
Brightcom.
Brightcom. Sir, my personal opinion, please stay away. There are issues with the corporate governance, and I wouldn't be very comfortable. So my personal view, in fact not my personal, Marcus Mojo also has a very strict, we have zero tolerance to the, even if there is a smell about the corporate governance, we would prefer rather we play safe than sorry. We don't want to be, we might miss out a good company even if there is a smell of a corporate governance, but we would not like to take a chance with the hard-earned money of yours. So George sir, my answer would be please stay away from Brightcom.
Okay. This question by Anil. Sunil sir, please advise me on identity technology. Though the financial trend is very positive, it's falling.
So I think, Anilji, what is happening is the complete IT is under severe pressure, am I right? It's not only L&T technology. I think the sector which was supposed to do well, suddenly this BFSI segment posing a big challenge. And that has really spoiled the sentiment toward the IT sector. So it's not only L&T technology, all other technology companies are facing a headwinds in terms of the sentiment. We need to wait and watch what kind of action this IT companies are coming out with to mitigate that. In fact, L&T Technology does not have too much exposure to BFSI segment, but yet it has taken a beating because of the sentiment is poor. And sometimes, as Warren Buffett was saying, no company can trade at the fair valuation. Either it will trade at the excess much higher than the fair valuation, or much lower than the fair valuation. And that's how the market. So the fair valuation happens only in textbook. It doesn't happen in there is nothing called efficient market theory in the real life. And that's what happens. So right now, because of tailwinds, because of headwinds in the IT sector, L&T is falling.
Okay, I'll move to this next question. Yeah, this is by Archit. How much more can FI sell in cash as per your experience? They have sold so much in the past 2 years. They are holding in Nifty 50 might be at an all-time low.
So I don't think we should expect any substantial FI selling from here onwards. They sold near about almost 2 lakh crore they sold in the first half of 2022, and they bought near about 1 lakh crore in the second half of 2022. And in the first Jan and Feb, I think they sold near about 40,000 crore. So if you look at last 1.5 years, they sold near about 1.5 lakh crore, which I believe is almost done. I don't expect much to have an impact on the downside on the selling pressure of the FIIS. And I was mentioning my opening comment, I do expect FIIS to come back very strongly, and hence I do expect positive. Either holding at 50 all-time low, I don't know, to be very frank with you, but your guesstimate may not be off the track. In fact, I do also suspect they may be all-time low as far as Nifty 50 is concerned.
Okay, moving to this next question, this is by Suresh. I have invested in the following companies in 2021, Laurus Labs, Andhra Petro and Morepen Labs. Is it ideal to book the losses or do I need to hold at this time?
Sir, I would be in your place, I would book the losses. My personal opinion. Laurus Lab, it was our stock of the month. We booked profit and then scrip has fallen substantially. And we had reasons why we got out of it. If you are a paid member, Sureshji, you would have also received an advice from us why we exited. Because it's, its ability to go out of non-viral formulations and APA did not seem to play out the way management promised, and that did result into underperformance. Andhra Petro move out, Morepen Lab. So Morepen Lab, this is my personal opinion, I never got comfort level with the Morepen Lab, to be very frank with you. It has if you go back to check the history of this company, every now and then it does give a promise that company should do well, and somehow company do have a spurt in the price movement, but the spurt doesn't remain sustained at the higher level. And every rise I've seen some smart people will coming in and give away the shares, and unfortunately gullible investors will get stuck with this company. So according to me, please move out of this.
Okay, this question by Suhail. Hello Sunil sir, what's your personal view on Yes Bank, keeping in view the shares have unlocked since a week ago but it has remained stable, though it is a sell-rated stock on Markets Mojo?
So my comfort level, in fact, it's those who are attending webinars, they know very well what my answer would be. My answer would be please stay away. I do expect, see, there are two reasons. One is that SBI may decide to get out. And what time they decide to get out, what price they decide to move out, we don't know, but I think they will. And they don't now have a lock-in. So that number one. Number two, banking sector is facing a lot of headwinds. And that also doesn't give a reason to hold on to Yes Bank. So my advice, my personal belief is that it should underperform, and that's what my belief is.
Okay. Question by Ankur. It is often quoted, expect the unexpected, and that nothing hardly goes as per plan. If Fed somehow makes 50 BPS hike, could there be a bloodbath on the street?
So Ankur, I think I had preempted your question somehow. Jason, I did mention in my opening remarks, for some reason, if yes, 50 bips, there will be a bloodbath. There will be a panic. And of course, immediately there will be a panic, and then post in the conference, what Powell has to say and how we justify 50 bips rate hike. See, today, we are saying 80% probability that we should expect 25 bips rate hike. 20% probability, zero rate, no rate hike only. There's no change in the rate of interest. If I have to make a very bold statement, I would say 95% probability, only 25 bips rate hike, and 5% probability, no rate hike at all. That's what I would have to take if I have to go to the extreme end. The base case is 80, but extreme case is 95. So I don't see 50 bips. You are right. If it is 50, there could be a pressure on the market.
Okay, moving to this next question. This is by Ashok. Are we not helping FIIs to sell their holdings at whatever price they deem fit by being more eager to buy what FIIs are wanting to sell?
So, Ashokji, let me flip the question then. So when they buy, what are we doing actually? We are selling and giving them the shares to buy them, am I right? And when they sell, we buy. So, I think we need to all understand. See, in India, most of the money that comes to India is ETF money. I don't think this, and when the view on the country changes or whether the weightage of the country changes, ETF fund managers have no view on the country. Am I right? They're basically following and mimicking the benchmark that they follow, and they need to do that. Of course, they can be underweight or overweight by certain percentage point, but not beyond that. The buy-only funds are not getting out of the market. Now, your question is that are we not helping them? As long as you're buying a good quality company, the FI will realize their mistake. They got out of a company at the wrong time, and in fact, they should be buying more. Give you a classical example. How many people are aware that in March 2020, FIIs have sold very heavily? Who bought it? You and me. Did we give them an opportunity to get out of the market? No, on the contrary, they gave us an opportunity to create more wealth because they sold out in panic. We bought it, and then we all know, rest is history, that how market bounced back from April 2020. So, it's depending upon which company, what. I have seen many times, FI getting out of the market, the company at the wrong time, and again come back to buy the same company 6 months down the line because they realize that they made a mistake by getting out too early. So I think your statement on the face of it looks little yes, but in real life it doesn't happen that way.
Okay, this question by Malik. These days, almost for 2 years now, negative news is coming one after another. Sometimes war or Adani or SVB, etc. Was this same prior to 2020 also? Did you experience so many events one after another?
Malik sir, this is very normal. I am again repeat, this is very, very normal. So, in equity market, बोलते हैं ना मुसीबत कभी अकेली नहीं आती, सब साथ में लेके आती है. Okay, and that's what has happened in the equity market also. So when chain of events happens one after another, वो होता रहता है, it's a chain reaction. When the sentiment is bullish, which was the case in 2020 and 2021, and if you read my blog also at that point I said, when the sentiments are strong, the market acts like a Teflon. No negative news will stick to it. The market will keep riding up, up and up. So that we have seen in 2020, 2021. Am I right? Post June or something, 2021, the market started declining slowly and steadily. And as the good time did not last, I have also seen bad time does not last. It's very, that's why we said, if you remember Malik sir, webinar after webinars we have been saying that equity market always give you non-linear returns. It will test your patience, it will test your confidence, but if you remain committed to it, you make handsome gains from the equity market. Discipline and the patience are the two virtues that you must have to create the wealth. So this is not happening first time, and I must tell you, it is also not happening last time. It has happened in the past, it will happen in the future. Key to make money is to have a disciplined approach.
Okay. This question by Dheeraj. Hi Sunil, what's your personal view on the cut loss strategy through limits depending on individual's risk appetite? What's your view in limit for cutting losses? A loss of 10 to 20, 25 to 30, or even upwards of 40 to 50%?
So Dheeraj, I have a very different view and very little unconventional view. Unconventional because that's not the normally people do. That's why. In fact, it's more logical. Okay. So my reason to remain invested in a company is not a function of whether it's a profit or a loss. My reason to remain invested in the company is that the reason why I bought that company is that reason continues to be true or not. If the answer is yes, then there is no reason for me to get out of that company, whether at profit or at loss. As simple as that. Am I right? So then this percentage does not come into picture, whether it's a 10%, whether it's a 20%. But now the point is that you also need to understand, and which I said in my Warren Buffett webinar also, you must keep your eyes and ears open. If there is a change that is happening, and because of that change, whether globally or locally, and the new data point suggests that this company, which has a very good future, is likely to underperform, you must accept that new data point and you should move on. फिर वो निकल जाने का, फिर वो लॉस नहीं है 10% है, 20% है, 50% है. In fact, I'll give you another example. I've said many times. Susdon was a classical example. Okay. I would have asked investors to get out even at 80% loss. Forget about 20-25. वो कंपनी नहीं चलने वाला है. अगर नहीं चलने वाला तो then what's the point holding that company, living in hope that I'll make money in that company. Am I right? So it should never be a percentage. It should be reason why you need to exit should be defined, both for profit booking as well as for loss booking. I'll give a very classical example. I don't want to name because it's always, it gets unnecessarily, people don't realize and they start buying or selling based on that, and then that creates a problem. One chemical company, I bought it. The script moved down by 30-35% from my purchase value. I did not get out of it. Why? Because the reason why I bought continues to remain there. As I speak to you, and normally I have a very good track record in terms of whenever I buy, the script goes down first. वो invariably हुआ है मेरे साथ. So if I have to, just to give an example, 10 companies if I buy, probability is very high, then 9 companies, the script would go down after I buy. Okay. So, and I'll give you strategy, how do I then basically play with that. Okay. Now coming back to this, the same chemical company today must be 5x or 6x from my purchase price. Forget about the lower prices. So that's why I say your reason to exit should be well defined, both on upside and the downside. And the how do I counter whenever I know that whenever I normally buy, the script will further go down. I know you people will ask me, so I'm making a statement here. I don't buy what I want to buy at one go then. I do spread my purchases knowing fully कि मुझे वो नीचे भी मिलने वाला है. So then I stagger my purchase in that particular company in a slowly. I build up my position in that company so that my average cost works out much better.
Okay, moving on this question by Kalpesh. What's your view on Vodafone?
So, again, my personal view, Marcus Mojo, I think is a sale at this point of time. My sense is that Government of India, they've gone on the record saying that they don't want only 2 private players. They want 3 private players. So come what may, Vodafone will survive. And when someone survives, the longer that it survives, higher the probability that company can turn around. And when the company turn around, the price appreciation goes up. So it's a little high risky stock. Why? Because if for some reason if this company is not able to continue its operation, that company value will become zero. So it's a high risk, high return kind of a strategy. So if you can, risk appetite is high, maybe you can have in your portfolio. If risk appetite is low, please stay away.
Okay, moving to this next question. This is one of the investors. What about Godawari Power ISPAT? The market price is 380. It has announced the buyback offer for 500. Will it cover the price difference?
No idea, sir. I have not looked at Godawari Power, so I'm not a little updated with this. Maybe if you can ask me next time, I'll come back to you. And I don't know whether it's a tender offer or it's a market purchase. If it is a tender offer, will it cover the price? कभी होता नहीं है सर. वो cover थोड़ी price होता है वो तो आपको tender offer में देना पड़ेगा. This company and then, so in fact I did a very interesting study and I have not published it. That does the buyback do value addition? Like does the script goes up post buyback? And most of the cases doesn't happen so. That's what I realized. Jason just remind me that we need to do that webinar. The data is readily available with me. I just need to put in a PPT and some other work, and I'll work on that. So what I've observed that normally buyback doesn't do value addition. In fact, Warren Buffett has said very nice thing. If the buyback is not done at the right price, it does hurt the investors who remain invested in the company. Why? Because those who got out, they made a very good profit, and the investors who remain invested, they lose out. So which is not a fair thing to do. So Warren Buffett says that you need to evaluate the company, whether this company is doing buyback at the right value. If it does at right value, your stake in the company goes up without you buying a single share. Why? Because number of shares will come down. Am I right? So since suppose, just to give an example, you are holding 100 shares of a company and total equity capital of that company is only 1,000 shares. Thoda mota, just to make it simple. Now if company decides to buy back 100 rupees ka shares, that is worth 100 rupees equity capital. So what happens? Previously your stake was 10%. Why? 100 divided by 1,000. Now number of shares get reduced to 900. So your stake goes up 100 divided by 900. So you did not bought a single company, and because the denominator came down, your stake increased in that company. So not all buybacks are value accretive, and I need to look at Godawari Power and I can come back to you.
Okay. This next question by Guru. Why Indian market is reacting more than others to US developments? We are the worst market year to date compared to Europe or other Asian markets.
Guruji, I don't know whether we are reacting more or other markets are reacting more. I don't know, to be very frank with you. It's a good, interesting question that why is that happening? I don't have any plausible answer for that. It is just that Indian market has shown a lot of resilience in 2022, and maybe it's a time for market to little underperform to come with the averages. But why it's comparing this one, I don't have an answer. Maybe it's a good, interesting, thought-provoking question that you have asked, Guruji. Let me just find out also. I don't think it has performed so badly. So let me just see some data if I can take you through the. In the meantime, just take another question and then let me.
Okay. Another question. One of the investors, Mr. Manish, has asked your view on Reliance.
So Reliance, I know it has not done well, and I think this company has been struggling for quite some time. The story that really remains with the what we call Reliance is that value unlocking, whether it's a retail, whether it's a what we call Geo. I think that is what the story is all about. So my sense is that Reliance, so it's my personal opinion, I think eventually there will be a value unlocking that would happen. And if that is going to happen, I think it should do well. That's what my sense is. So my suggestion would be, please continue to hold. I know it's frustrating you people. but that's the best way you need to look at it. So I'm just looking at it. So I just say, just can you, Jason, if you don't mind?
Yeah, sure.
So this data is as of March 15th, okay? This is on an economist website, and this is the performance of the Indian market. So if you look at Indian market, we are down by 5.4%. But, there is a Malaysia which is down by 6.1%. There is a Turkey which is down by 7%. Now I can understand Turkey had an earthquake. Thailand is down by 6.2%. Brazil is down by 6.4%. This data is on 15th March, so please take it. Israel is down by 5% and so on and so forth. So even Saudi, which is this one down by 4.7%. So I think you are right. The US did very well. Some of the Euro area did very well, I think. But some of the emerging markets seems to have come under pressure kind of stuff. But we are the only one who is down. The answer is no, because we have seen Malaysia. What has surprised me that despite so much turmoil happening, the Pakistan market is up 3.6%. There is nothing which is going right for Pakistan. Am I right? The opposition leader Imran Khan has been, about to get arrested and whatnot. The inflation has gone through the roof. The people are not having electricity, and yet this market. So sometimes very difficult to explain the logically what could be the reason behind that. But yes, India is not among the best, but India is not among the worst also in that case. But yes, you are right. Europe did very well. US did extremely well. And the beauty is that problem वहाँ पे चल रहा है, उनकी economy अच्छे तकलीफ में है. People are talking about soft lending and recession and so on and so forth. And then equity market is doing well, and India would be the fastest growing economy in the world. But यहाँ पे we are facing. So these are, see, as I was telling you, Warren Buffett का quote वो textbook में होता है. The perfect efficient market theory. Market tend to trade higher or lower much substantially as compared to the Fed value. So this is what is happening. Will it sustain? This do get corrected over a period of time. So the short term, yes, what you are saying is right. We have underperformed the US market, but there is a high probability that by the time the 2020 comes to an end, India would have been outperforming the Europe and the US market. Sometimes short term, there could be a distortion in the valuations.
Okay, we got this question by Rajiv. Hello Sunil bhai, if profit or loss is not a consideration for selling a stock, then what's the rationale for fall from high exits?
So, Rajiv ji, what I gave in my personal opinion, number one. Number two, fall from high is the concept that we have basically brought in based on IP, and whatever IP suggests that if you follow, see, you have to follow in complete system in totality, am I right? You can't put a Rolls-Royce engine in an Ambassador and work on it. Am I right? You have to complete process has to follow. And our IP, which is completely automated, where we look at our score of the company, and based on that, our IP, see, we don't have a reason to why we are buying that company, right? It's purely based on our IP, we are suggesting you on 4 dots: quality, valuation, CFT, and technical. Am I right? And based on that, we follow IP. Now, fall from high criteria suggests what? That market knows something which our IP is not able to capture. So the score still remains high despite the 4 dots. So it's not exiting based on the score IP. The score continues to remain little high, but the fall from high criteria get triggered, and hence our IP suggested. We did the backtesting suggest that means market knows something which we don't know, sir. And hence we are exiting from that company. That's what we have done. So that's what fall from high criteria, and that's why we need to follow the complete system in totality. We can't take Rolls-Royce engine, fit into Ambassador and say बस ये चलने वाला है. नहीं चलेगा ना फिर. Your tire, your fuel injection system, your steering, your braking system, everything has to be in sync with this one. So our IP does suggest that we need to follow fall from high to maximize the returns.
Okay, moving to this next question. This is by Mr. Arun. If I pledge my share in a company, will I get buyback offer?
Yes, sir. You should get definitely you should get a buyback offer. Why not? Because in the books of the shareholder and the company, you're still the shareholder. You have pledged. That doesn't mean that you are no longer the owner of that. You are still owner. It's like when you pledge your house to the housing finance company, doesn't mean that you are not the owner of that house. Am I right? You are definitely an owner of that house. So there is nothing. You'll still get a buyback.
Okay, question by Mr. Natmal. What's your view on fertilizers?
Just 1 second. Arjunji, only thing is that you need to unpledge before you can tender the shares in the open buyback offer. That's the only thing you need to remember that. So before you can't basically, otherwise there is no hypothecation, am I right? Why would the lender would allow you to give in buyback? Because ka to nikal gaya na, security. So if you wish to really participate in the buyback offer, you need to unpledge that shares. Yeah, sorry. Jason, sorry I cut you.
Yeah. Question by Mr. Natmal. What's your view on fertilizers sector and particularly GFC and SPIC?
I think Natmalji, I think we need to wait and watch for the monsoon. I think monsoon is going to be little critical for the fertilizer sector. Am I right? And I was reading one article which yesterday or day before yesterday, where Government of India wants to, give incentive to the state government to promote organic farming, to reduce the use of fertilizer, and if you are able to do that, the state, the 50% saving of that fertilizer subsidy will go to the state, which they can spend on some other infra projects or whatever the welfare measures they can use it. So I think we need to wait. GSFC and Speak, my request would be please go with the score of the available on the website. I have not looked at both this company off late, so don't have any view. But fertilizer sector will definitely would be a function of what happens to the monsoon.
Okay, moving to this next question. This is by Mr. Kishan. So the IMF, World Bank, RBI, all are saying that India are a better place and a sweet spot, then why are we not seeing FI buying heavily? FIs are believed to be more intelligent and overall smarter. It seems they're expecting further market to go down, then enter.
So Kishanji, I beg to differ with you. I don't think they are more intelligent and overall smart. I beg to differ with that. I'm not saying all are this one, but it's generalized. I think is not fair in that sense. See, as I was explaining you, FIIS also is a function of what kind of redemption they have. Suppose, just to give an example, you put your money in a mutual fund, and fund manager will invest that money in the company. Tomorrow you said, I want my money back. What the fund manager will do? Even though he is bullish on the market, he would be forced to sell to create liquidity so that he can pay you the redemption, am I right? And some of the FIIS money which has gone out of India is basically redemption pressure they have seen in their fund. So even though they may be bullish on India, they'll be forced to sell because वो liquidity कहाँ से लेके आएगा? Am I right? And that is what is happening. So I'm not very sure that they are because they believe the market further gone. That's why they are selling. Sometimes also because of redemption that they are getting. And why redemption? अगर US में आपको tax free returns अच्छा मिल रहा है, why do you want to take a risk of investing in equity market? Am I right? And there is always an inverse correlation. Am I right? Remember that. The more money will come to equity when the rate of interest are low. The moment rate of interest start inching up, people will then start taking trade-off between debt में डालूं कि equity में डालूं, debt में डालूं कि equity में डालूं. That same question that you are basically asking, same investors who have put money in FI fund are also asking the questions. Am I right? And that's where you see some amount of an outflow that's happening. That's number one. Number two, I think Indian market also have seen a lot of resilience and did outperform in 2022. And they also thought let's lock in some of the profits, and they can always come back. Remember, the sentiments of FII is as fickle as your and mine. Am I right? How does others one explain? 1 month they come very aggressively, next month they get out. They don't come to the market for 1 month. Am I right? They are supposed to be long term. FII is supposed to be. But then why do they do that? It's not that India's story has undergone change in 1 month. So one is redemption. Second thing, where they are able to book profit, they want things which makes sense to book profit, they're booking profit. That's what it happens. So I don't think they're smarter or something as compared to World Bank or RBI.
Okay, Mr. Sunil, that's it with the Q&A session for today.
So thanks a lot everyone taking time out. Do expect tomorrow market to remain choppy in the US, which in turn will make market a little choppy on Thursday on Indian bourses. But expect market to remain little volatile because of news flow that's going to come either because of Fed or because of some bank or financial institution coming under stress, and that's going to continue for some more time. With this, thanks a lot everyone taking time out and attending this webinar. Thanks a lot Jason for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil. And I think the current market situation has caused a lot of investors to panic. Tomorrow, I'll be having an event on portfolio strategies to weather these stormy times and how to de-risk and reallocate your portfolio accordingly. Looking forward to seeing you all come for the event. Goodbye and have a great evening. Thank you so much.